of the taxes that you are going to owe when you close on an apartment. Stay tuned, we're covering everything here. This is Real Estate Investing in New York with Christina Kremidas, helping you achieve a future of financial success by making intelligent real estate investment decisions today. Welcome back to another episode of Real Estate Investing in New York with me, Christina Kremidas. And cheers, in this episode, you just closed on your apartment. Whether you are buying or selling, here are all of the taxes that you are going to owe. Many people are very surprised when they realize how much they are going to owe at closing in the form of closing costs. The largest closing costs you're going to have to pay, whether you are buying or selling, are taxes, and they can be exorbitant. I always give my clients a heads up on what their closing costs are going to look like to firstly allow them to mentally prepare and budget for them. But when you are buying an apartment, these closing costs and taxes are things that you can use to negotiate and ask for credits to cover. It's something to definitely keep in mind as early as the offer stage when you are placing an offer on an apartment, because if you know what your taxes are going to be, you can ask for credits to cover them. If you're financing, this actually makes the biggest difference for you, because when you are taking a mortgage out on a property, whatever the price is that you end up paying for that property, you're only paying, if you're, let's say you're financing 80% of the purchase price, you're only paying 20% of the price in cash at the time that you close. The rest is realized over the course of many years of your mortgage. So when you negotiate for credits, let's say you have a closing cost that's $20,000 and you can ask for a credit back to cover that. Instead of just reducing the price of the apartment by $20,000, let's say you get a credit of $20,000. That means that when you close on the apartment, you have $20,000 more in cash at the time of closing, versus if you negotiated the apartment to be purchased for $20,000 less and you're financing 80% of that amount, you're only saving $4,000 in cash at the time of closing, and the rest of that savings is realized over the course of your entire mortgage in order for you to eventually recoup that money. So credits are a great way to negotiate. Knowing what you're going to owe at the closing table is a big part of understanding what you can get credits for, so let's go into it. All of these examples that I'm going to share with you, I'm going to give you real dollar amounts for, not only percentages, because I want to put into context how these costs really add up. So for every example I am going to be giving you, this assumes an apartment sale price of $2 million, and it assumes that you are financing 80% of that purchase. So ultimately putting down 20% or $4,000 and financing 80% or $1,600,000. We'll start with taxes that are paid by the buyer. And keep in mind that the taxes are the largest component to your closing costs. Aside from taxes, you will, whether you're a buyer or a seller, have additional expenses at closing, but the main biggest parts of your closing costs are the taxes. For buyer paid taxes, we're going to start with mortgage tax. The mortgage tax is just over 2% of the amount of money that you are financing, that you are getting a loan from the bank for. So in the case of our example, this would be just over 2% of $1.6 million, which comes out to $34,800, a sizable amount. Keep in mind that if you are buying a condo, you will pay mortgage tax. If you are buying a co-op, you will not pay mortgage tax. There are a lot of people that choose to buy co-op because it is that much more affordable at closing than buying condo. It's not the only great reason to go co-op over condo, but some people do like the slightly lower closing costs that co-ops offer. So first one, mortgage recording tax, just over 2% of your loan amount. In this case, we're looking at $34,800. Next is mansion tax. Mansion tax actually increases as the property sale price increases. For a property sale price of $2 million, the mansion tax is 1.25% of the purchase price. In this example, for a $2 million sale, your mansion tax is going to be $25,000, and this is paid by the buyer. Another tax that's paid by the buyer at closing are property taxes that are paid in advance. So if you're getting a mortgage, the bank is going to collect a few months of upfront property tax payments from you to hold in escrow for you to make sure that they never run behind on paying your property taxes. The bank actually pays your property taxes directly on your behalf. And when you pay your mortgage payment to the bank, that payment usually includes the amount of your monthly property tax. So the bank will always have a few months of escrow property tax on hand just in case you stop paying, because it's very important to not fall behind on paying your property taxes. But every time you make your mortgage payment to the bank, they're replenishing their escrow fund for you where you have a few months of property taxes held on hand. The amount of property taxes the bank will collect upfront will range between 3 months to 6 months worth of property taxes. So in this example, we're going to assume around $6,000 that would be collected by the bank in upfront property taxes. This, of course, will range based on the property tax amount that you owe monthly from building to building. But on average, if they're collecting 3 or 4 months of property taxes, you can assume that it should cost you around $6,000 up front. Now for your taxes paid by seller. A big one is flip tax, and most co-op buildings have flip tax in place. And the interesting thing about flip tax is that even though it's called a tax, it is not really a tax that's paid to the government. Flip tax is a building fee, and it is instated by the building. The building has total control over whether or not they charge a flip tax. Mostly all co-ops have a flip tax, not all of them do. And condos rarely have a flip tax, though some of them do have one. And the flip tax ranges from building to building between 2% up to 6% usually, though I've seen lower and higher flip taxes in different buildings. For this example, we're going to use the average flip tax amount that I most typically see in co-op buildings, which is 3%. So 3% of a $2 million sale is $60,000. Flip tax is usually paid by the seller in a transaction. However, some buildings actually have a flip tax paid by buyer policy, and many sellers also will list their apartment for sale, and in order to list for a more competitive price, they will actually write in the listing that one of their stipulations is that the buyer is to pay their flip tax. So the buyer ends up paying it, but at the same time, they got to list their apartment for $60,000 less in this example, and the apartment looks much more appealing, and the buyer feels like they got a much better deal and ends up paying the flip tax on their side, unless they negotiate that right back to the seller, and then in which case they have to figure out how they want to split it up. Long-winded way of saying that the example for this particular case we're looking at, we'll assume $60,000 of flip tax. Transfer taxes is the next closing cost tax that is paid by the seller in a New York real estate transaction. Transfer taxes are paid to both New York State and to New York City, and the combined total amount for your transfer taxes in New York City and New York State will total 1.825% of the sale price. In this instance, that would equate to $36,500. Another tax for sellers when they close on a real estate property is not due at the time of closing, but it will be due when they file their taxes. And this is their capital gains tax. Capital gains tax is charged off of any of the profit that seller earned when they sold their property. So if they take the amount of money that their property sold for and add to it any amount of money that they invested in the property over time and took that total amount, deducted it from the sale price that they just sold the apartment for, you get the dollar amount that is considered profit. There are more things that go into this equation, but overall, you're really just looking at the profit, and this is what is taxed. It ranges, capital gains tax will range based on your income in New York. So you're best off consulting your attorney and your accountant for this, but you do want to keep in mind that there is an extra tax there, and it's not very small. So keep that in mind too. It's a pretty significant tax on your profit. But since everyone's profit is going to range so dramatically and everyone's income is going to be in a different bracket when it comes to the capital gains tax, I'm not going to provide an estimate for it here, but it's something that you should keep in mind. So with that said, I don't know, there weren't a ton of things listed here, but there were enough to really rack up the cost, and you might be surprised that just in taxes, before you account for application fees, attorney fees, filing fees, all of the other associated costs of closing, broker fees as well, before you even think about these, just taxes alone for the buyer in this example totaled $65,800. This is money that you owe at the closing table. And for the seller, their taxes totaled $96,500. This is a lot of money to think about when it comes to the fact that this is not your total closing costs, and this is really money that's going to the building or it's going to the government. It's not like it's money back in anybody's pocket. Combined between the buyer and the seller, because these costs can often get negotiated and thrown onto either side, no matter which side is really the default payer for them, you're looking at a combined total for a $2 million condo, which in New York City is not exorbitant. There's a combined total taxes of $162,300. Again, quite sizable and worth noting in advance so that you can properly adjust your expectations. You can properly negotiate and make sure that you get a price for the home that works for you, whether you're on the buyer side or the seller side. That sums up this episode. Again, we need a stiff drink when talking about costs this high, but it's just part of the game in New York City real estate. I hope that you enjoyed this episode. If you're watching on YouTube, thank you for being here. Please like this episode and subscribe to the channel so you can be notified when new episodes drop. If you're on the podcast, thank you so much for being a listener. Please share the podcast with a family member or friend who you think would benefit from hearing this info. As always, thank you so much for tuning in. I love hearing from you guys. Please never hesitate to send me an email if you ever have any questions coming out of any of these episodes, or if you would like for myself and my team to represent you in the sale or purchase of your home. Thank you guys so much again, and stay tuned for the next one.